is the Federal Reserve committing the biggest fumble of all time? Look, several major central banks are already cutting rates. Switzerland's already at 0%. Papa Powell? Oh no! He's apparently allergic to rate cuts. This stubborn pause has created a weird pressure cooker for markets. You know, he cut twice just before the election to try to help the other guys. Now, where's your rate cuts at, buddy? Nowhere. Inflation's almost 2%. He's not cutting. But Bitcoin's holding steady. Altcoins, altcoins, ugh. And yet, if you're playing the long game, this delay might actually set up the next explosive rally. Stick around because we're diving into how the Fed's hesitation could actually turn into your biggest opportunity if you know what to look for. Now, the Federal Reserve left the federal funds rate unchanged at 4.25 to 4.5% for a fourth consecutive meeting in June 2025. That was widely expected. Policymakers continue to take a very cautious approach. They're apparently still trying to decipher the ripple effects of Trump's 40 chess tariff stuff. Inflation is largely not a problem anymore. It's ticked up very slightly, but it's 2.5% approximately. It's not a big deal. Trump, of course, disagrees. He's already called Federal Chair Powell a numbskull and typical many other insults as well. They're too late, pal, they're calling him. What's more interesting is central banks around the world, they've already hit the brakes. Not just once, multiple times. The European Central Bank, for example, has slashed interest rates to an enviable 2% in an attempt to revive sluggish economic growth across the European Union. Problem is, by the way, in USA, the US economy just keeps being strong, even if Q1 did put in a negative quarter. But in the Eurozone, that marks their 8th quarter-point cut in the past year, with more expected by September. In Canada, there has been a similar easing streak from 4.75% policy rate in July last year. The Bank of Canada has now brought rates down to 2.75% with the latest cut coming in March. New Zealand's been cutting. Other economies right around the world, they've all been cutting interest rates. Freaking China's been cutting. The real shocker, the Swiss National Bank, they've cut their interest rates all the way to 0, man. That's crazy. And they're not ruling out going negative interest rates. What? If I were Swiss, I'd be seriously tempted to take out a gigantic loan and load up on Bitcoin. 0% interest rates, baby, let's go. Negative interest rates are gonna pay you to buy Bitcoin. To be fair, European central banks are easing for a reason. Inflation is falling and growth is stalling. Switzerland is already dealing with negative inflation right now, while the Eurozone has reported 1.9% inflation as of May. These are target numbers. Target's about 2% for the Fed, so Eurozone inflation levels are below that. Meanwhile, the US is showing stronger growth and inflation remaining stubbornly just above 2%. It's not like it's 10% or 5% or 4%. It's like 2.4 or 2.5%, but it's still just above the Fed's target, giving Powell just enough cover to keep waiting. But for how long? How long until problems start happening? Things start breaking? Well, we're getting to that in just a second. By the way, if you are trading these markets, you gotta check out Femex. It's not just another exchange, one of the OGs, okay, known for deep liquidity, reliability, and unrestricted access. That means wherever you are in the world, you can trade on Femex. So if you're serious about trading, here's your edge. If you use my link right down here, you're gonna get straight away upgraded to VIP level 2, and that's gonna slash your spot maker fees by 50% and cut your futures maker fees by 40%. And look, if you're trading a lot, you know how much those fees add up, and these are huge discounts. You're gonna put a lot more money in your pocket at the end of the day. And it gets even better. Femex is offering up to $30,000 in sign up and deposit and trading bonuses. The more you put in, the more they give you back. It's simple. Limited time offer. Check it out. Link down below. Okay, so how long, Jerome Powell? Let's check out what the Fed is seeing right now. The US economy is still holding up despite all the doom and gloom. Like what we discussed, it's doing much better than other developed countries. Yes, the GDP contracted a bit in the first quarter, but the Atlanta Fed GDP Now model currently estimates a real GDP growth for Q2 2025 at an annualized, seasonally adjusted, absolutely cracking rate of 3.4%. Workforce data is also peachy. The current 4.2% unemployment rate is near a 50-year effing low. Unemployment crisis my ass. Come on. And well below the long-term average here, by the way. So unemployment's not a problem. Inflation's not a problem. What are you waiting for, Jerome? Let's do it, buddy. Of course, we don't need rate cuts dot-com bubble happened during high rate seasons, but still be better. It would be better. Let's put it that way. The sticking point continues to be inflation, and inflation has been going down, nearing the 2% target. However, Papa Powell thinks a rate cut still out of the question in the short term, although there are starting to be dissenters within the Fed. Waller, for example, saying, why not cut in July? But why doesn't Jerome Powell want to cut rates? Well, because he still believes the Fed needs to study the impact of tariffs. Not everybody agrees. In fact, a lot of people do not agree with Jerome Powell. He's being overly conservative. Vice President J.D. Vance even called out the Fed's double standard, saying he'd love to hear why Jerome Powell was able to slash interest rates by 50 basis points just before the election, but he can't seem to do it now, even though inflation now is lower than it was then. But tariffs are so scary. Meanwhile, Fed Governor Michelle Bowman stated that she would support a rate cut at the July meeting if inflation pressures stay muted, and she's not alone. Fed Governor Chris Waller echoed a similar view, suggesting that a cut is on the table if the data continues to cool. Papa Powell, there's dissenting voices within your circle, my dude. So what does all this monetary checkers, they're playing, they don't even know what the hell game they're playing anymore. It's backgammon. It's probably backgammon. It's awesome, by the way. Anyway, everything it has to do with crypto, especially if you're holding altcoins and wondering why your bags still feel dead as crap. The truth is, crypto, and well, especially altcoins, have never performed well in high interest rate environments. That's not to say they can't. Again, dot-com bubble, we had the equivalent of altcoins, which is pets.com and stuff like this, absolutely surging. If you get enough greed in the environment, things will be fine. But lower interest rates will make money easier and make the flow of money easier. Financial conditions are pretty loose in America right now, but they'll get looser. Now, during the last bull run, crypto market cap hit its peak while interest rates were at the floor, okay, near zero. You have to remember, lower interest rates means cheaper borrowing. That adds liquidity into the market. With cheap money, you could expand or create businesses that could have, the flywheel effect. You're hiring people, they're buying dog coins, things get real crazy. Cheaper money also makes investing in risk assets easier and a little more attractive. See, people are holding on to bonds and money market funds and stuff like that because the rates are still pretty good. Why would you go buy a speculative stock that only has a 1% dividend yield when you could buy bonds? When money is tight, speculative assets tend to suffer a bit more. Our dog coins are at the very bottom of the food chain, okay? The only real exception right now is Bitcoin, which has been adopted by Wall Street and country strategic reserves, and it's been crazy, right? It's being treated more like digital gold than a gamble these days, and that's exactly why most of us are still married, of course, to our altcoin bags. Waiting on for the hope, man. Praying, watching hopelessly as Bitcoin hits multiple all-time highs. It's nice for my Bitcoin bags, obviously, but for the altcoins, it's been pretty rough hold for some of these. I know there are a few areas of outperformance. Hype's done very well. Syrup's done very well, for example. A few others are doing pretty good too. However, this is all like a pressure cooker waiting to burst. With other major central banks easing, the liquidity tide is starting to rise again. Global M2 is still pumping. We have a lot of things working in our favor. And a rate cut from the Fed is not a necessity, but it's going to help. It's going to help risk assets flourish. And obviously, all the money in the world doesn't go straight into crypto when we have easing of rates and stuff like that. But it will certainly stimulate multiple economies, and sooner or later, the money starts to trickle down to Bitcoin. That's why the global M2 pumping, for example, is so impactful, because it's the rising tide that lifts all boats. And what's good for Bitcoin is eventually good for altcoins, and all the same narratives apply. And even if one way our dog and cat and frog coins are going to get some love. And here's the good part. Trump really wants those rate cuts to come sooner than later. He wants to unthaw the property market. He's not shy about putting pressure on the Fed to make it happen. When it happens, it could open up the floodgates. Bitcoin will pump, then altcoins, then dog coins. It's happened before, and it's going to happen again. It's amazing how well the market has performed in spite of the higher rates. It tells you what a methodical, not panic, methodical rate cutting regime is going to look like. Markets are going to go nuts. In fact, according to a Gemini report, easing financial conditions have historically set the stage for altcoins to shine. Over the past 6 or 7 years, Bitcoin's dominance has tended to shrink when the Fed eases up on policy, as investors get more adventurous and pour money into altcoins. Again, just to highlight, and it's worth repeating, we can still have incredible performance for altcoins in a high rate environment if we get the sort of level of mania that the dot-com boom had, which we could, but we're not there yet. We're far from it, in fact. The Gemini report also notes it usually takes about 9 months for these policy changes to fully ripple through the crypto market, which is crazy. Extended cycle theory, baby. We're not top until late 26, maybe in 2027. Theory. Let's see. obviously. The Fed's first rate cut this cycle happened back in September 2024, followed by rate cuts in November and December. That puts the edge of that sort of 9-month window, August, September. So if history holds, altcoin season maybe as close than most people think. Maybe we need more rate cuts for it to come. I guess we'll find out. But here's the bottom line. The Fed might be hesitating now, but the fuse is already lit. Bitcoin's already made its move. Altcoins are going to move as well. And yes, they have lagged, sure. But historically, they don't stay quiet for long once liquidity really starts running, okay? Financial conditions are loose. The business cycle still has ages to go until it gets to the top. Global M2 is pumping. Rate cuts are coming. Rate cuts are already happening around the world. Money's becoming easier. All the conditions are there. The pressure's building. And maybe with this 4-year cycle still intact. If so, well, then we've got 6 months, and that's going to be the most violent period for altcoins. Global M2 is still rising, and hopefully tensions will continue to cool down in the Middle East, and everybody's going to make peace and decide to buy dog coins instead of firing missiles at each other. But if the economy takes a hit from any sort of tariff wars or actual shooting wars or any stuff like that, or unemployment starts surging, yeah, these are going to be problems, and the Fed's going to keep not cutting rates. I wouldn't be surprised if in July we don't get a rate cut, simply because they're going to say again, well, but tariffs, we don't really know. But the voices within the Fed's inner circle are starting to dissent, and I think we're going to see a rate cut sooner than people think. Either way, whether it's inflation, recession, war, or political pressure, it's all going to lead up to the same conclusion. Sooner or later, they cut interest rates. And maybe they don't go back to quantitative easing anytime soon, but there will be ways that they inject money into the system. The money printers, quote unquote, will be turned back on, and when they do, it's going to get real crazy, guys. Remember to lock in profits, not screenshots, okay? Let me know down below if you believe that altcoin season is still going to come or if you've given up hope. Thanks for watching.